Hi everyone, my name is John and I'll be the moderator for today's panel. So the topic of discussion today would be the impact of digital transformation for traditional banking models. So I'm glad to be joined by the distinguished guests. So I'll quickly briefly introduce myself first and I'll let the rest of my peers also an opportunity to introduce themselves. So I'm John from ABCDE. ABCDE, we are a crypto-native Web3 VC fund that invests mainly in three verticals. The first vertical being EVM infrastructure. So over the past few years, we have done deals like wallet solutions, data knowledge graph, hardware, software, ZK deals. The second vertical that we actually look into is the BTC ecosystem. So since last year of Q3, we have started deploying to the BTC ecosystem. We have also incubated our own L2s like BitLayer, Merlin, BitSmiley. The last vertical that we focus on is on the AI side of things. So we have been doing a lot of research and deep dive into the AI space, and we hope to invest in AI projects that can actually impact the consumer market. So without further ado, let me introduce our first speaker of the day. So Stefan, I'll leave it to you to kick things off.
Yeah, so name is Steve Richardson. I work for Fireblocks. Fireblocks is a digital asset infrastructure company focused on providing wallet solutions as well as different product modules for enterprise customers launching in the Web3 space. I currently run our financial markets business and oversee our APAC offices as well. So very nice to be on this panel today.
Hi everyone, my name is Ian. I work for Flipster and my role focuses on driving operational excellence and delivering top-tier user experiences on our platform. I'm very happy to be here. I'm Singaporean and incidentally, I lived in Bangkok for 12 years.
Oh, I didn't know that. Probably I'm the only Thai in the panel. So my name is Phay. I'm the COO and partner of venture capital at SEABW10X. We are the venture capital and innovation arm of the Siam Commercial Bank Group based in Thailand. We invest in startup globally, mostly in anything that can disrupt financial service in the future. And our focus area are blockchain, Web3, AI. And we looking forward to the discussion today.
Absolutely. Hi, everybody. I'm Rebecca Evans from the FalconX Singapore team. I look after our Asia sales business. FalconX, if you're not familiar with us, is a global institutional digital asset prime brokerage firm. So what that means is we deal with any large digital asset institution or traditional institution who's looking to trade, transact in digital asset ecosystems. So we do OTC trading, OTC derivatives, sponsored access to exchanges and borrow and lending, all with a variety of different institutions, including hedge funds, venture funds, prop traders, quant shops, family offices, banks, and a whole number of in between. So really excited to be joining the group today to talk more about digital assets and banks.
Hi, everyone. So my name is Sabrina Tachdjian. I am with the HBAR Foundation. That's a foundation that's supporting the growth of the Hedera ecosystem. So layer one, if you haven't heard of it. I'm leading the Fintech and Payments Fund at the foundation, and so I support our founders that are working to develop applications along the lines of stablecoins, CBDCs, micropayments, financial inclusion, real-world asset tokenization, etc., etc. So great to be here today.
Yep. So thanks everyone for all your quick introduction. I think let's go back to the topic of today, which is on the impact of digital transformation on traditional banking models. So personally for me, when I think about digital transformation, what I think about is over the past decade, you have your online banking where people can have quick access and transfer of funds. You have your mobile banking whereby people are able to look at your funds within a click of a button. And you also have your integration with apps like GrabPay, whereby people can actually just make payment directly from banking to consumer products. So I guess today we really want to explore more on how blockchain technology has actually changed and impacted the traditional banking model. So I guess that brings us to our first question as to how do you guys view blockchain technology transforming the traditional banking model, and what are the key changes that we have seen? Stefan, would you like to kick us off?
Yeah, sure. I'll kick everyone off. I mean, I think from my perspective, first and foremost is the change in the ability to own your asset, right? I think that's like a fundamentally different value model, right? So if you think about today, when you trade equities or you trade bonds, you don't really own the asset. Someone is sitting and holding the asset. If you're managing money in your checking account, really you don't own that asset in the way that you could control the movement of it 24/7, 365, right? And if you think about what you're seeing on the blockchain is that shift away from interacting with an asset to owning an asset, right? And I think that's a fundamental shift. So you think about the launch of things like stablecoins and the fact that that can sit in your wallet and you can deploy that 24/7, 365. If you look at things like what Franklin and Templeton did with their money market fund, or what BlackRock did, it changes the model of how people interact with assets. Now you have an asset that's on chain, it's deployed into a wallet, you're earning yield on that asset, and actually you're controlling the mechanism of how you can move that asset and interact with that asset in real time, right? And so that changes a lot of the models, I think, where it goes from more of a passive basis to more active basis in the control of that asset. And I think that's driving a lot of questions internally at banks in terms of what new models should look like for them.
Yeah, I can add on Stephen a bit. I think we see clearly, especially for cross-border payment, like, blockchain help disrupting the traditional rail, where it involves like many correspondent banks, many house fees, and then just via blockchain, it's just like peer-to-peer. And also I think asset tokenization is what Stephen already mentioned. I think that's going to disrupt a lot of traditional asset management firm. And also, I think I also see the growing of programmable money or proposed bound money, where I think this could actually have wider implication to the bank. Let's say, for example, like if we want to issue lending with specific purpose, we can do that with programmable, and then no longer need like reconciliation. So it will become much more efficient. Yeah.
And if I can jump in as well from the FalconX side of the business, I actually see the other side of it, where how crypto is weaseling its way into banks using the existing rails instead of transforming the banks. So primarily my interaction has been with some of the global investment banks and other global players on using their existing structures, such as, for example, we trade OTC derivatives under an ISDA. We're the first and only CFTC swap dealer in the US. And while that sounds quite boring, what that means is we can work with these institutions under their existing frameworks in tools and trade manners that they're comfortable and familiar with to get exposure synthetically to digital asset underlyings. So I think it's a two-bell approach, where from one side, we're going in through their existing frameworks to bring digital assets into the institutions, while simultaneously they're being pushed by whether it's competitive reasons or efficiency reasons to adopt more digital asset and blockchain infrastructure into their existing models.
Yeah, thanks everyone. I think the next question would be, we now understand that there's a huge overlap between the traditional banking space as well as blockchain. I think the next follow-up question would be, what kind of needs do you guys see in the crypto space that traditional players like financial institutions or banks could actually come in and solve these problems, and vice versa, right? And how blockchain could actually help to change the traditional banking models as well. Yep. Sabrina, would you like to take this question?
I'll take that one. Yeah, I think you're completely right. Like, it's a two-way street, right? So I think where banking can come in, where crypto still has some gaps, is I think by and large, people are still not used to custodying their own assets. So, I mean, I guess I'm taking the counterpoint to Stephen here, because yes, it's empowering to have to custody your own assets, but at the same time, it comes with some risks, and not everybody is comfortable with managing their private keys. I guess so many stories of people losing them or damaging them. So they actually, banks, tell us they get the request from their investors, their clients, say, hey, I have holdings. I want you to custody my holdings. I want to be responsible for it. Or they want to be able to purchase through the banking platform, as opposed to, signing up on an exchange and having, they kind of want everything in one place. So I think that's where traditional banking can come into play, maybe helping the non-crypto natives adopt digital assets because there is the demand, but maybe their user experience is not for the novice. And then on the flip side, of course, crypto could bring, I think, some fresh blood into banking. I think the 24/7 nature of trading, for example, something that banking's not used to. A diversification of asset classes. I think that the clients always want to have access to new things. They being able to fractionalize assets, through tokenization. That's also great because then clients can diversify their portfolios. It can also bring clarity to existing asset classes. For example, ESG assets, which suffer a lot from greenwashing. And then once they're on chain with all the data that's needed to actually gauge the value of a project, that actually helps solve some pain points. And I think Phay also brought up the remittance use case. That's a lingering pain point. That's you see remittance is still kind of running on rails that are 40 years old, right? And that's an area where I think blockchain is very, very promising.
I mean, I guess I was going to say one other thing. I mean, look, if you think about broadly speaking, right, balance sheet is probably the other thing that I think banks can probably bring into this space, right? I think whether or not they're partnering with different players in the ecosystem already that have the expertise to run operations on a crypto level at 24/7, right? So when we talk to financial institutions and banks and they're thinking about operating in crypto, a lot of their first basis is we don't have internal expertise to do this, but what it might look like is extending things like balance sheet, right? That then provide a gateway to really increase kind of the broader engagement in the space, and also some of the questions around what happens if, right? So I think a lot of people ask the question, to your point, there is this UX UI problem that exists, right? Which says, okay, it's very difficult to operate in digital assets or to manage private keys, et cetera. That's one piece. But I think the second piece is, well, I would love if BNY Mellon came in and custody assets. So if someone gets hacked, right, BNY Mellon has a massive balance sheet, right? Because for a lot of folks that are operating in the space, there's great expertise, but there isn't that level of balance sheet. So that extension of that traditional model of who's going to fortify in case of a loss, or maybe even insurance might be the next piece that I think is critically important. But I think it's going to be some combination, right? Because I think banks tomorrow are not going to get the expertise to run a 24/7 operating model. And there's folks like Falcon and others that are doing great jobs running these type of businesses. And so this ability to potentially bring some balance sheet into the space and kind of fortify what folks are doing at a level that can support some of the continue to support the growth of the ecosystem, I think will be really important.
Yeah, I just would like to add on. I think aside from being not that familiar with technology, like the tech play, I think but bank can come in terms of the navigating the regulatory complexity, because that's what they do all day, and to make sure that whatever crypto related service they offer is kind of meet regulatory standards. So I think that's also where the bank can help bridge the gap and perhaps bring in more institutional adoption.
I'd like to add on as well that completely agree with your point. Where I would like to see banks add on more is on the customer education aspects. There's still a very strong preference among potential crypto investors, I would say, to work with established financial organizations, and it's a great example for an opportunity to support the customers, with more education and building more loyalty, because it is so new to many people.
Yeah.
Yep. Thanks, everyone. I think that brings us to our next question. So I think majority of our conversation is talking about banking system that actually works. So you typically see that more in the developed countries. So what do you guys think about blockchain technology impacting countries whereby the fiat model doesn't work for them, like India, whereby the banks the interest rate is high, the volatility is high, you have banks shutting down every few months. So how do you guys see blockchain actually impacting the banking system in emerging markets itself? Yep.
I can jump in. I mean, I would say to your point exactly. I think it offers a safe haven, a store of value, which is the original ethos of blockchain, right? Is a lot of us are here because it offers that alternative store of value asset that's supposed to be anti-inflationary, uncorrelated. And while I would argue oftentimes nowadays Bitcoin trades more in line with QQQ than anything else, it still has that ability to be an asset that is not tied to the conditions in whatever country you happen to be living in at that time. So it offers a great opportunity. However, on the flip side, I think there's still a core underpenetrated part of the market that from digital asset institutions that are underbanked. I still deal with clients calling me every day saying, Rebecca, I'm a large digital asset institution and I can't get a bank account in whatever country I sit in. So it sounds, sometimes we sit here and talk about the future of blockchain, but then there's quite basic needs that aren't being met, where I have clients who can't launch businesses because they can't get fiat dollars in and out of their businesses. So whilst crypto can help solve some of these needs, it can also, the lack of banking rails on the flip side can also be quite a hindrance to people building businesses in this ecosystem.
Stefan, how about you? Do you see, like, for Fireblocks itself as a business, how do you guys see, like, emerging market as a market audience or target?
Yeah, look, I mean, I think we have to be practical and understanding that central banks pay a lot of attention to the way money moves, right? So the idea that they're going to allow something to come in and really disintermediate that without a certain level of caution, I think is there. But I think we look at use cases like cross-border payments for corporates. So we're working with different folks that are basically enabling, for example, an agricultural producer in South America to take local currency, convert it into something like USDC, or from the buyer and convert it and then deliver it in Brazilian real, right? Obviously, that's in partnership with banks that are tokenizing assets and supporting custody, but this actually provides some upstream capacity capabilities, right? You reduce capital charges and capital costs because you're not taking kind of a T+3 to T+30, right, delivery basis on what you've already delivered, right? And so kind of supporting the capital efficiency is one thing, and then supporting kind of the broader things like remittance use cases, either through existing stablecoins or through developing stablecoins that are happening from banks in those emerging countries, I think is a key use case, right? And I think it's something that folks have watched in the crypto native ecosystem of how folks have been able to navigate and use things like USDT and USDC to enable kind of the acceleration either of their businesses or for personal matters. And I think they're taking those models and then bringing them into potentially traditional banking rails.
I think to follow up on the CBDC point, I see more adoption or faster adoption in emerging economies. I guess because the infrastructure is not that mature and there's kind of a desire to leapfrog. So that's definitely one trend where, I mean, certain governments, not all of them, but certain central banks are quite proactive in adopting blockchain there. Just when it comes to local currencies not being very strong, then there can be some tension because people are actually going to, buy Bitcoin, buy, USDT or the USDC to try and hedge the inflation. And that's not always that can be seen as a threat, right, by some certain countries. But I think it's a good wake up call, right? It's a good reminder for those governments to actually have maybe more discipline in how their currency is being managed. But yeah, overall, I think the adoption, generally speaking, is higher in emerging economies. Just because the need and the opportunities are also less in terms of being able to invest as a retail investor. There's not that much. That maybe a local stock exchange is not that strong, and maybe there's not easy access to buying some S&P 500 or some other funds, right? But lack of instruments, right? Then that creates a need to kind of explore on the crypto end of things. Also, a number of emerging economies are highly dependent upon remittance, and remittance is slow and expensive, and crypto becomes kind of a de facto way to send money home. It's faster, cheaper, and then to off-ramp it, I don't know, in the Philippines, off-ramp it off a local exchange into peso. And so yeah, I think it picks up where the traditional ecosystem kind of lacks. And eventually kind of starts merging because you start seeing, like, to continue on the Philippines example, a lot more digital banks. And with the adoption, like, they tend to be very, maybe even more forward-looking than some of the banks in the more mature economies.
I mean, I personally would like to see us leveraging blockchain technologies for maybe more than digital currencies, and maybe to provide more like relevant services to emerging economies. An example that comes to mind would be like in the diamond industry, for instance, the digital ledger has been used for identification and like transactional purposes, transaction verification purposes, which actually brings us a little bit more transparency in a traditionally quite opaque market. Yeah.
Okay, thanks. The next question would be more on the regulation side of things. So I think now you have increasingly see a lot of Web2 fintech companies, as well as traditional banks trying to adopt blockchain. But of course, there's two sides of the coins, right? For your fintech companies, they are not subjected to government regulations. But on the other side of the coin, you have your traditional banks that operate under a license. For example, you have a SEC license, you have SFC license, you have a MAS license, which actually makes the adoption of blockchain a lot tougher for them. So how do you guys see the different framework differing for both sides of the coins, and how does it impact their adoption for blockchain?
I think coming from the bank side, I think because we are very like heavy regulated, and the existing regulatory framework kind of designed to ensure the financial stability, protect consumer, and make sure there's like prevent system risks. So I think that's kind of make us a bit challenging when we try to innovate anything new. Is not only blockchain, but I think for blockchain, when it's especially for public blockchain, is connect to the internet, and the risk is very hard to control. I think so when we try to innovate by integrate anything that related to banking system, so everything we need to ask for the Bank of Thailand approval first, even for just the experimental project. Because right now for our banking group, we cannot hold any token yet, even just for experiment purpose. So I think that's one example. That's why it's been challenging for us, even though we want to try to be innovative and experiment with new solutions. Is still under the being regulated entity. Yeah.
Then I think my question to you would be, would that actually drive more traditional banks to actually adopt a private blockchain instead of a public blockchain? Would that make more sense in terms of security and data protection?
I think we see both approach. Like some banks will, especially for trade finance, that we see more banks go to private blockchain and build consortiums. But some banks like us also work with the other tech providers and see like how we can move further. Yeah.
Okay, thank you, Rebecca. FalconX, you guys work with, I believe, a lot of traditional and institutional clients as well. So do you see like this regulation framework actually handicapping a lot of your clients in terms of the strategies or the business that they want to deploy or start?
I would say overarchingly, regulatory uncertainty is probably one of the biggest hindrances of institutional adoption that I see from traditional financial players coming in. Especially, I joined FalconX in our U.S. offices out of our New York office specifically, and spent years working with a lot of these global traditional players who've never touched digital assets before, working on regulatory compliant ways which they could access safely and comfortably digital assets, only to have them pull back for regulatory uncertainty reasons. So I think, quite frankly, it's not necessarily the guidelines that are the issue, but rather the lack of clarity and kind of the overhang people see in that space. And I know it sounds trite. We all say, oh, regulatory clarity on every panel. So I hate to be the person who brings it up, but it truly is hindering the adoption of these large global institutions into this space. But I also wanted to say, I think Stephen brought up a really interesting point earlier on capital constraints, and the difference between fintech and banking regulation, to your earlier point, will be what the capital costs are to banks. Then balance sheet, coming from traditional prime brokerage, my day in and day out is managing balance sheet and what that looks like at these global investment banks, and how cryptos ends up sitting on the balance sheets of these banking institutions will have a big impact on how they're able to adopt it into their ecosystems as well. So I think that'll be an interesting one to watch on the regulatory side. Like, take, for example, right now, if you're a hedge fund and you're trying to trade a CME option, Bitcoin option versus a Deribit crypto option, you're going to get much better leverage ratios on Deribit as a crypto native exchange rather than on a traditional exchange. So I think that bifurcation of regulation and capital efficiency will also drive adoption or hinder adoption to a certain extent in terms of dollars being spent, traded, and sent through the ecosystem.
Anyone else want to chip in?
Maybe just to clarify, I don't think the fintechs necessarily are devoid of, or do not have to comply with any regulation. That's well, they have maybe less constraints than a entity with a banking license, but they still have to comply with local regulations, and they may benefit from like sandboxes or kind of a more forgiving environment when they're getting started. But overall, they struggle just as much when there's no clarity. I would say there's a lot of regulatory arbitrage happening in terms of deciding where to incorporate.
Yep. Maybe Stefan, I have a question for you. So I think custody has always been a big part of the traditional banking model. So eventually, I know Fireblocks as an MPC solution. Do you guys, how do you see the future of custody merging with traditional bankings? In the sense that, do you think that a lot of these traditional banks will eventually build up their own in-house self-custodial system, or will they actually adopt an MPC solution like Fireblocks?
Yeah, I mean, I think we look at it as there's probably a trajectory where people start to build things eventually in-house, right? I'd ask the question that, theoretically people could build their own firewalls, but they use Checkpoint and Kaspersky, right? Because the risks are very dynamic and they change, right? One would argue generally banks are not seen as like technology companies. I don't think banks look at themselves as technology companies. Operating in blockchain, like, you need to be a technology company. You need to be a technologist. And so, for Fireblocks, we have 200 people that are across like product and engineering. And one would argue that we've changed and looked at the infrastructure multiple times against multiple risk factors, and we're looking at competitors and what they're doing and the new dynamics that are coming in and how blockchains are changing and all the different protocols. I mean, like, it's changed fundamentally like a ton in the last 2 years, right? And so keeping up with that level of change, I think, is relatively significant. So yes, today, a bank may use us for Bitcoin custody. Tomorrow they may build their own wallet infrastructure to support that, but there may be another blockchain or another component that they need to integrate that they will continue to use Fireblocks for. So, we anticipate that there's going to be a change in the way that people utilize the system, but we also argue that if you're building that kind of infrastructure, you may not be innovating on something else, right? So there's always a trade-off between building that entire infrastructure yourself and then what you can do with the same level of resources, or investing to do that, right? And so people will always have to weigh what makes the most sense and what's the better kind of impact for their business. There are a lot of crypto native firms that we use, that use this today that have great technologists internally, and they will always make that trade, right? They might use this for some things, they might build internally for others. So, as in every business model, like, those are risks and things to kind of evaluate. But of course, like, I don't think like the system will look the same it does today, right? Like, we're in the early innings of like what kind of the blockchain ecosystem will look like and what's being developed. I mean, you can just look at the number of projects outside, and when you go to Dubai or Paris Blockchain Week or Consensus, everything, right? There's so much change. So we anticipate that folks will be building for a long time, and folks will have to kind of keep up with that.
I think the common consensus we have right here is blockchain is inevitable, right? Be it whether you're a banking system, whether you're a fintech company, I think the adoption of blockchain will come and stay eventually. So I think the last question that we have for today is, with the rise of blockchain technology, how do you think banking systems as well as fintech companies are able to ensure the data privacy and security without compromising users' data? Yep.
I think for the bank, like regardless of whether it's blockchain or anything new technology, we just need to always invest in the, advanced cybersecurity system. And I think in terms of the privacy data, that one I think we started to see since all the privacy data protection law coming out, and the bank need to adhere and comply, as well as now when we design to new product, we just need to think about like how privacy works and then allow customer to kind of choose and control their data more and more. Yeah. So right now I think we only see providing consent to use data, but I think in the future it could be more and more, especially when we starting to use AI more in terms of data processing and how and able to answer to the customer what data being used. Yeah, should be more transparent in my opinion.
I would say in terms of protecting user privacy, zero knowledge proof is probably one of the key innovations that came out of blockchain, where you're able to answer a question without actually sharing the underlying data. So this way there is no risk. You're not transferring any data. You're just transferring some information about the data without. I think that's something that will get adopted in terms of, you can answer questions about a user. Has he passed KYC? Is it beyond a certain age? Or is it accredited investor? Is the balance in this user's account a certain amount? And so you can actually power a lot of the logic based on information that you can actually keep close to the user. So I think it's getting really important, especially in the AI age where people don't know where their data is going. Is it training some models, et cetera, et cetera?
Yeah, I mean, I was going to say that, one concern, if we look at kind of where we were 2 or 3 years ago, when banks were looking to launch, let's say, tokenized real world assets, everyone went towards private blockchain, right? Because there was this idea that I don't want person that scans the internet to understand like what wallet is associated with what client and how much of X asset are they holding at any one point in time. And what you're actually seeing is that you're seeing a shift towards public blockchains, I think, which is critical because in essence, interoperability or the ability for wallets to connect to those ecosystems become much more scalable, right? If you have something on a private blockchain, really you have to get everyone to connect into that infrastructure and then you manage it. And that's not scalable, right? So if you have something that sits on a common layer one, right, but then it has the ability to create more permissioned or private pools within that layer one, we're kind of seeing that basis happening a lot today, right? So that the infrastructure connectivity is very similar, right? So I just need to connect to this common layer one, but then I can break apart or create a different or a subpool within that layer one to allow my activity to go on in a private basis, right? And so that's why I'd say we're seeing a lot more experimentation on more public blockchains with this kind of attribution. And then I think like digital identity is becoming like a key piece, right? And the ability to utilize that information in a very private way will be key. But I think it's a very important, basis that needs to happen, right? Because the inefficiency in transferring data, both at a corporate level or at a retail level, is very significant, right? Even between entities. So we're talking with a large global bank and their entity in Hong Kong can't pass data to their entity in London. Right. So if you move from Hong Kong to London, you'd have to resubmit all the data. And this idea of bringing, a token that a user holds and authenticates and then exposes to a particular institution under a set of standards, both keeps privacy, but also helps with efficiency. So these kind of activities, I think, are quite critical and I think are happening because of the innovation that's happening in the crypto native space that then is being brought to the traditional space. And so I think a lot of financial institutions are paying attention and that'll be really interesting.
Yeah. So Ian, you guys, Flipster itself is a trading platform, which you guys handles a lot of the user data, trading data, user KYC data. So how do you guys actually help to protect and ensure the users' data privacy and security?
I think that there are fixed protocols set in place for the handling of user data in almost every centralized exchange. What Flipster does in particular is kind of a separation of church and state, where our KYC function is very separate from our trading function. So it's relatively hard to connect the trading backend to the anything that's personally identifiable to the user.
Okay. I think that's all the time we have for today. So on behalf of our speakers, I would like to thank the audience for paying attention to our panel. So if you guys are looking to connect with the speaker, I think their profile will any of our Twitter or LinkedIn be pasted? If not, actually, I think we have some time. I can give the speaker some time for them to share their socials, and you guys can just follow or just connect with them there. Yeah. Stefan, would you like to kick off? If you guys have any
Not public.
social, or if you guys want
I
to
am
remain
on
undocked,
Yeah,
that's fine.
Twitter, but I don't say much on there. I'm more of a scanner of Twitter, but I'm definitely on LinkedIn. So please connect with me there, and happy to message anyone.
Please follow me on Telegram. Connect with me on Telegram. It's at the other Ian, because I'm not the only Ian in the company.
I think Flipster also has a booth out there. So if you guys
Also
are looking
has a
to
booth.
connect with Ian, you guys can just head to the booth. Yep.
We also have both. I'm actually from SCB10X, not Kungsi Innovate. That shows here. That's so yeah, SCB10X, we have both outside. Yeah.
I'm going to go the boring Web 2 route and also say LinkedIn is the best way to get a hold of me. Or my email is Rebecca, REBECCA, @falconx.io. But keen to follow up on any conversations from today.
Yeah, going with LinkedIn as well, as my Telegram gets flooded pretty easily, and I'm easy to find because of the weird last name. So there's probably only one of me there.
Yep. I think that wraps up our panel. So thank you, everyone. Yep.
Thank you.